Thank you, Mr. Chairman. And Mr. Chairman, thank you for being here today. I haven't had a chance to raise some questions since 2008 on the Financial Services Committee on the other side. So it's good to have you in front of me, and thanks for taking time.
Sure.
We have we ask a lot of questions a lot of different ways, and I'm probably not going to be any different, but let's give it a shot. We haven't passed a budget around here in 4 years. Are you optimistic that sometime in your lifetime we may pass another budget around here in Washington, D.C.? For that matter, let me ask you another question, and you can answer them together. Do you think we'll ever balance a budget, have a balanced budget in your lifetime?
Well, I would settle for stabilization of the ratio of debt to GDP, which is a slightly less tough level.
Sounds like a no.
I have, it's easy to criticize, but the politics is very difficult. I understand that there are a lot of very different views and strongly held views, and it's not easy to come to agreement. So I don't think Congress is not trying. I know you're trying, and I hope that you can find the agreement to achieve these important objectives.
Well, the reason I raised the question, I think the sequestration issue that we have in front of us on Friday is a result of our lack of budgeting and effort to budget. I'm from Nevada, so if I'm putting money down, I'm putting $100 down, the sequestration comes and goes on Friday. Then as soon as that occurs, we get into our budget committee markups that are supposed to happen on March 11th through the 15th. Putting another $100 down, that doesn't happen. Then we're supposed to bring those bills down to the floor sometime on March 18th, and then March 27th, government funding expires because we don't budget. And I'm arguing that that day comes and goes and we have a big argument. All I'm talking about is the instability that we have, and how difficult does that make your job?
Well, it makes my job difficult, but it also makes the economy's job difficult. Again, as Senator Merkley mentioned, the uncertainty associated with not knowing how policy is going to be developed, and what tax rates will be, and what spending will be, and what programs will be, and which contractors will be receiving funding, et cetera. Those are important concerns.
And I know your policies are based on monetary policy and also unemployment and employment. And I have to believe that our indecisiveness and inability to get things done is causing a lot of consternation. You made a comment, and you've actually repeated this in this hearing, that you'll continue. I want to go to quantitative easing, that your purchasing of these assets will continue until substantial improvements in the outlook of the labor market in context of price stability. Will you explain to me a little bit more in depth what that means?
Well, sure. We're going to be looking at a variety of variables. We'll be looking at payroll employment. Is it strengthening? Is it sustainably strengthening? Is the unemployment rate coming down? So those are indications.
Do you have a target?
We do not have a specific target. We've given thresholds for our rate policy. We have not extended those to our asset purchases, and the reason is a couple of reasons. One is, as you mentioned, there are a lot of other things happening in our economy, like the fiscal issues that you referred to. But in addition, we are paying very close attention, as a number of you have mentioned, to the efficacy and costs of these policies. And that makes it very difficult to say this is the number we're going to achieve. So we're doing our best to communicate the criteria for action, but we've not been able to come to a specific number which encapsulates both the change in outlook for the labor market and the assessment of cost and efficacy, which is another part of the decision process.
Do you believe that your asset purchases are causing any kind of an equity bubble?
I don't see much evidence of an equity bubble. Earnings are very high. As I said, the equity risk premium is above normal. And that is, in other words, pricing is, equity holders are still being somewhat risk averse in their behavior. But again, we have a two-part plan. First is to monitor these different asset markets. The second is to try to understand what would be the implications if we're wrong. What would happen? Who would be hurt? What would happen to financial institutions? Would there be broad knock-on effects if, in fact, some particular asset turned out to be in a bubble. So we're trying to do both of those things, and we do not rule out that if these problems become sufficiently worrisome, that they would be taken into account in our monetary policy.
Chairman, thank you. Mr. Chairman, thank you.